Hello and welcome to the first episode of Season 2 of Housed, the Shared Living podcast. I'm Sarah Canning from the Property Marketing Strategists.
I'm Dan Smith from Student Housing Consultancy.
And I'm Deenie Lee from the Property Marketing Strategists.
Can't quite believe that Season 1 spans 28 episodes and more than 5,000 downloads. It's crazy, and I don't think when we started we thought we'd be sitting here in September starting Season 2. But due to popular demand, we're back for a brand new season, and we're really happy to introduce the episode sponsor, Miru Visuals, the video production with meaning. And Deenie and I have actually been working with the team at Miru for a client, and they've been absolute geniuses at capturing some truly special footage that really captures the essence of each building. We often talk about how customer service is hard to capture on a website or social media, but the Miru team have absolutely nailed every single brief. They specialise in creating stunning property videos that will make your listings and content stand out from the crowd and add value to your brand. With their expert team, they'll bring your sites to life, whether you're in the student accommodation sector, residential or commercial. So to get more out of your video content and brand, visit miruvisuals.com or ask us to introduce you to the team there. And thank you, Miru, for being the sponsors of this episode. And on with the show. So it's been about 7 to 8 weeks since we did a newsy episode, and I think we need to reassure all the listeners out there that we're not going to be catching up on everything that has happened over the summer. But due to being in September, it kind of feels like the start of a new school year. For any of you working in student accommodation, it is the start of your new academic year. So we will be taking a deep dive into student accommodation for this episode. So I guess where we are with student accommodation, we've come off the back of clearing. We're finishing off filling beds for the season 24-25. Really, there shouldn't be rooms left at the end of August if you've nailed your pricing proposition and marketing strategy. But if the price is too high, it's not going to appeal to domestic students anyway. So is clearing more about lower tier universities attracting students on lower budgets? Like, should clearing really be such a focus for the PBSA sector?
The problem with clearing is it's always been seen as kind of that mop up part of the season. It's like anything that's left, we can mop it up in clearing. But I think that the demand trends, the way that kind of the market has been selling over the year means that it's not really about mop up anymore. It's actually, people shouldn't have a load of rooms left at this point in the season, like you say, Sarah. And I think people who are desperately putting everything on clearing to sell out their rooms is drastic stations, really. And I think that student accommodation sells all year round. When they open rates in kind of October, November, they're selling right up until August. So if you think you're going to sell the bulk of your beds in August, then either your proposition needs to be very much targeted at first year students and probably with a university partnership, or you've got your proposition all wrong, basically, I think is where we're at. And I think the other thing is that clearing has changed throughout the years. It used to be much more about people not getting their grades and then having to find an alternative, whereas so much of the last couple of years in clearing is about that upgrading because they've got better grades than they had. So it's a really changing beast, and we've said it before and we'll say it again, is you can't just do the same that you've done year on year. You've got to look at the data, look at the trends, and make sure that you're shifting and changing your strategy to meet those changing needs.
I don't want to downplay this. It's been the most difficult clearing that I can remember, and for various different reasons. This time of year, obviously, you're, as a PBSA operator, investor, or developer, you're focused on domestic students, maybe trading up or not quite having got the results that they want, and looking at changing universities. And you're looking at a late international market where the students are typically more focused on, right, let me get my exam results, get my visa in hand, and then I know that I can book, and I'll book my accommodation late. The market has changed drastically post-COVID. And it's changed in the sense that this year, we're seeing a drop-off in international students. There's no easy way of talking about this. When you look at UCAS and the figures that they have, they take such a small amount of international undergraduate students. It's about 14% or so. So, the rest of that 86% are going direct to the universities, through agents, through pathway providers. UCAS is saying that the numbers for internationals are down by about 2%. Then when you look at the visa data, up to the end of June, which is the latest visa data we get, and before the peak period, just to caveat that, that's 17% down. Then when you look at enrollee And the data that they've got, an enrollee is an application provider for about 1 in 4 universities in the UK for their international students. They oversee all the applications. They're saying they're around 40% down, and they're overexposed to tier 2 universities, the sort of post 92 universities, slightly less so on the Russell Group. There has definitely been a flight to quality this year, and we're seeing the top of the pyramid, Russell Group universities, clearing up effectively and making sure that they are taking as many students as they possibly can, both domestic and international, in spite of the fact that apparently they lose £3,500 per domestic student. But it seems to me that international students overall are down, I would say, anywhere between 10 and 15% on the whole. Now, that is pretty big in terms of the numbers that we have coming into the UK to study both postgraduate and undergraduate courses. Now, postgraduate courses, I think, have got a bigger hit to them than the undergrad recruitment because of various different reasons. It's not just the dependent visas where they were canned in January. The government put a stop to those, which really heavily affected India and Nigeria in particular as a market. This is across the board with postgrads. And I think it's something that we don't have the data for. The data is all over the place in higher education in general. It's always delayed. There's a massive lag. We never have it real time. It's the most frustrating thing about working in the industry from my side of things. So we have to piece together all of these different data sets to fully paint a picture of what is happening at the moment. And from where I see it, domestic students are down 1.6% according to UCAS. Clearing was slightly better, so that was up to the end of June, and then clearing fared slightly better, but most of those clearing students are getting hoovered up by the top Russell Group universities. Where that puts post 92 or your sort of tier 2 universities is in dire straits, if we're being completely honest, because they are reliant on a specific number of students to balance the books. Everybody knows how difficult the university funding crisis is making things for universities at the moment. But overall, and given what we said to Stephen Cleal from UCAS the other day, where he sort of explained that it was now the journey to 930,000 rather than 1 million by 2030, and that's new applications per year. It's been a really tough year. That is being shown in the data that we've seen. There are certain cities that are coping better than others, and some operators will be absolutely flying through this, like Unite, like Empiric, where you look at where they're up to in terms of their occupancy and estimated occupancy, both predicting between 98 and 100% occupied, and both with year-on-year uplifts from last year to this year of between 7 and 10%. There is no way that everybody else is finding it that easy. Those two operators, the sort of flagship operators for the UK, are focused very heavily on Russell Group universities. That is a core part of their business strategy, which totally makes sense. As a PLC and a listed company and huge numbers of shareholders, you are going to make sure that you are defensive. You know that you have hopefully that long-term capital, and so you can really take a long-term view of it. The strategy is focusing on those Russell Group universities. Everyone else that's slightly exposed to tier 2 or post 92 universities, or those cities that are reliant on those, they are having a much tougher time, should we say. So it is a very varied picture city to city, depending on supply demand, depending on university success and international cohorts, etc. But overall, I've not seen a more challenging clearing in the 10 or so years that I've been working in PBSA sector. Is that how you're seeing it, Sarah, Deenie?
I think the other point, and I guess you've just touched on it, is I don't know that enough people in the sector really understand the cycle and really understand what clearing is. And, I think, we've often, Deenie and I talk about the reliance on kind of maybe junior marketeers that maybe aren't being led in this way. But clearing is very specific to the market that you're working in, as you've just said, Dan. And, I think that unless your strategy is to hold your cheaper rooms back for clearing, then those students aren't going to live with you anyway. We're talking about tier 2 universities. We're talking about domestic students. International students that you talk about, Dan, they're coming in late in the market, but they're not coming through clearing in the traditional sense. So I think if operational teams, marketing teams, sales teams are talking about clearing, they need to be very specific what that means, because having a clearing campaign is very different to having a last minute campaign to mop people up that may or may not be coming through clearing, or that are second or third years who just haven't booked yet, or international students coming through different routes. If we're talking about clearing, it's domestic students, and those students may or may not even live away from home, because if you haven't got enough cheap accommodation that's going to appeal to a domestic student, or you haven't got the product that appeals to a domestic student, then they're going to come through clearing, but they're not necessarily going to need accommodation. So I think it's really, really dangerous, like Deenie said at the beginning, to kind of put all your eggs in one basket of clearing. I feel like clearing shouldn't be a thing. I think if you've got your strategy right throughout the rest of the year, as an operator, you should ignore clearing. You should have your sales, your operational teams turning rooms around, preparing for check-in, doing their last minute pre-arrival comms, and ignore clearing in an ideal world. But you can't do that if you haven't got the strategy right the rest of the year.
I think it's one or the other. It's like you say, Sarah, you're going to have a strategy whereby you've got rooms that are more attractive to those that are coming through clearing, and you have that strategy and you know those rooms and you've looked at the data and you've made an assumption of what you're going to sell, and therefore you run a clearing campaign and it's all intended. I think where we are at the moment is that everyone hopes and crosses their fingers that they're going to sell before clearing, and then when they don't, it's a quick rush around. So I must do clearing, so I must sell it out. And we talked about it before, but that's when dynamic pricing comes in, and people think, well, I can sell my expensive rooms because I'm on lower rooms, so therefore I'm on another tier, and that's working against them. So I think it is, like you say, so it's just about understand your building, understand your proposition, understand your market, and develop a strategy that suits those needs.
I think one of the key issues that I'm seeing with clients, and I should just say, most of my calls at this time of year, and we've got 6 projects live, are from operators or investors who have properties that aren't performing as they expected, and that may be on occupancy or revenue. But we are very much in the era of affordability, and that word is bandied around all the time. But in clearing, more so than ever, it is the operators that are left with the higher priced rooms that are struggling the most, or those properties that are more premium in nature. Now, I think that that doesn't mean to say that you won't fill if you have a premium property, but I think that this goes back to the value gap as well that we've seen from your research that you guys have done to see that, well, hey, you've got plenty of satisfied students in the affordable sector, and you've got plenty of satisfied students in the premium sector. But those buildings that are almost caught between premium and mid-range with premium pricing, they are the ones obviously that are struggling, and students are very much voting with their feet. As the supply increases, they are really focusing heavily on value, but that price seems to be more important than ever. Previously, I think you could probably interchange location and price. This year, it's price above everything, and that is where a lot of operators have fallen foul of this. And there are some pretty horrifying occupancy stats out there at the moment for certain cities, and I think there needs to be a bit of a recalibration of pricing in some of these markets. And they're typically the markets that are seeing an increase in pipeline, increase in supply coming online, or the university's built a load of beds, or maybe the BTR, which is a whole different conversation. Maybe BTR is taking more students than you would have expected, and that wasn't calculated in feasibility studies. But it feels like we have hit the tipping point, and that there is going to need to be, in some way, shape, or form, for certain properties, a recalibration of pricing and business plan, which is something that we're starting to deal with as we move into the next academic year. But that pricing is absolutely pivotal. I've never seen a more price-sensitive market, particularly from internationals, and that is slightly concerning, that international students are maybe voting with their feet and saying, yes, the higher education cost is a lot less than the US, but the accommodation cost is quite a large percentage of their cost of living, and that has gone up and up and up. And I think it's those cities that have really pushed it, and those operators in particular that have really pushed it, that will see challenges in their occupancy this year.
We've managed to get hold of some data from the E-Word who are a strategic property digital agency. And they've registered that the number of unanswered calls has almost doubled during the last few weeks, reaching 55% of unanswered calls in some locations. So then you've got to think, okay, not only have you got beds to sell, it's a really tough market. Maybe your pricing, maybe your proposition, maybe your marketing hasn't gone well. If that's the case, are you staffing correctly during clearing to take account of everything that's going on at the moment? And it's like, if your strategy is all about clearing, then you've got to do it like really, really well. And also, we've always said that it's not actually, even if you've sold out, the students through clearing are still going to be coming to you. They're so desperate in some locations that, they'll still be calling you even if your website says sold out. And it's about your reputation and customer service. So I do think that, the whole clearing strategy is a whole eco cycle. It can't just be about doing advertising. You've then got to be able to staff to an appropriate level that you can deal with the inquiries, whilst also turning the building around, whilst also preparing for check-in, which is literally either happened if you're in Scotland or literally happening in the next couple of weeks. And yeah, I think that's, that could set you up for the next year. If you deal with those inquiries properly and you provide amazing customer service, regardless of whether you've got rooms or haven't got rooms, that's a pipeline. That's a database that you'll be building for the following year. And maybe if you haven't got rooms, you can partner up with another property and maybe have a referral deal in place so that you can support those students.
That's something that I think we should be seeing more of, because there are plenty of properties that have done well, partly because they may have nominations agreements. Why wouldn't you partner with someone else rather than saying, sorry, we're full? And that's something certainly that we did in Nido as well. We made sure that we had referral agreements with certain other operators. But I think it's been such a challenge this year for lots of different reasons. But, without doubt, PBSA has been affected by that. You make a great point about the customer service, not having enough staff, and I do a lot of market research around this time to just see if the operator is operating well on behalf of the investor. The client is typically, for me, the investor, and I oversee the performance of the management operator. I had 3 emails back from different operators where I was requesting a room saying, sorry, we're incredibly busy at this time. We may get back to you, but, please do send us an email. No, I wanted to pick up the phone, or I wanted a live chat experience. I wanted real-time interaction with someone, and I couldn't get it. And that I was blown away. 3 separate occasions, different property management companies, and there was very much a pushback. Now, I know that you have to manage expectations when it comes to customer service, but this is the time to be staffing up and making sure that you are speaking, especially to those properties who are underoccupied. You make sure that you are speaking to someone who is interested in booking a room. And I think another thing to bring up at the moment is that I've never seen so many flash sales or cashbacks. And it's going to sound like the fundamentals aren't looking particularly good for PBSA at the moment. I don't want that to come across, because all of this is cyclical, and there are various different factors that we can come onto that have impacted this year, not least the government and their attitude toward the previous government, shall I say, Conservative government, and their attitude towards international students and the net migration figure. But, I've seen £1,500 cashback, and the marketplace commission is astronomical. But the issue is there just aren't any international students that are coming in. Like, we were hoping for a Chinese or an Indian summer, should we say, and those late bookings just don't seem to be arriving. Speaking to the key marketplaces out there, they are pushing commission, and some of that is market-led, where operators are saying, look, we'll pay whatever you need, just fill the building. But they don't have the students to actually be able to deliver it. So some marketplaces are then saying, hey, we can do this for an upfront marketing fee, but I'm not seeing that that's actually delivering success at the moment for certain properties. But this is the toughest clearing that I can remember, with huge cashbacks, lots of flash sales. One operator has 10% off all rooms across their entire portfolio, and some of them are doing certain, let's say, backdoor commissions or backdoor offers, whereby they are offering different prices to marketplaces or agents or different partners. And that is, I think that's fine. Competitive advantage, totally get it. Leverage your relationships. And I think those operators will do particularly well. But overall, when you look at every operator website, there are flash sales, cashbacks, and you've got to understand that there are also some heavy marketplace commissions and activities there too. So challenging one. Feel for anyone who is out there with an underoccupied building at the moment, because it does look like it is going to be tricky to fill. And so I would look at some other areas to focus on.
It comes down to these lean structures that we have in the sector again, whereby there's just no spare resource to enable people to pivot. Like you say, the fact that, Dan, you're getting emails back saying, yes, you want to book a room, but email me, not give me a call, come and have a tour, or any of that customer service. And, we've got that eWord data where we're seeing that half of calls are going unanswered, is purely A, about resource. There's no bodies left to do it because it's such a busy time of year. It's B, about strategy, because there isn't a strategy or sales strategy in place that kind of says, this is the process for sales, this is what we go through, this is what we do. And I think we still have an issue in the sector where we don't really put the impetus that we need to put on sales and selling. We still very much have a operational team that are trained, supported to operate a building, but they're also the sales team, but they're not given that support to be a sales team. And I think, as you say, Dan, this is a really tricky year. It's not behaving like we expect it to behave. But I think what we've got to learn is none of the last 2 or 3 years has behaved as we expected it to behave. So those times have gone. And we need to start structuring up, building a strategy and developing something that enables us to pivot when we need to pivot, and is looking at the data and being prepared for the things that might possibly happen that we can't see, that hasn't gone before.
Yeah, I think with the sales strategy side of things, I think sometimes it kind of feels like, on The Apprentice, where they start a task like really well structured, when they're like selling something on a stall in the middle of London. And then by the end of the day, they're just giving everything away. And like you're cringing behind the sofa because they're literally almost being rude, and all of their customer service has gone out the window and they're desperate. It's panic stations. It kind of feels that's what clearing is, and everyone forgets what's gone before. And Deenie and I are always very conscious that when we're consulting, that we're working with people, that they've spent a lot of money on marketing in the 9 months before clearing, but it feels like that's all gone out the window. And what to Deanie's point about staffing, you've built a database up over 9 months of really good solid student data that you've spent really good money on. And we always say that the first port of call is go back through that data, but people don't have the resource, to Deanie's point, and before you go to panic stations and you start throwing everything at it, you've got to kind of think about, what have you already spent money on, where else is the data, and can you utilize it? Have you got someone working evenings, for example, calling through that database, asking, have they found a room? And it's all good intel. If they have already found a room, where have they found it? And make sure that that's added to the CRM. It's like there's so many tools that I think can be used before you get to that £1,500 cashback panic stations situation. Another bit of interesting data from the eWord is about parents as well. And I think that's another thing that in clearing, you've got to kind of adjust yourself. It's a different student to what you've been dealing with for the previous 9 months. Previously you've probably been marking to existing students in the city that are going into their second and third year. Come clearing, you're talking about 17, 18-year-olds that are going to university for the first time. So, according to the eWord data, 18% of ad clicks for UK campaigns came from 45 to 54-year-olds in the last couple of weeks. So it's about parents as well, but I'm not sure that many campaigns are necessarily geared towards parents. And the data, are you logging parent calls as well as student calls? Are they logged on the CRM as a parent call so that you can target them differently and you can go back across the data? It's just such a shame that it ends in such a panic, because you kind of want everyone to just go, okay, everyone stop, breathe, let's think about it. But I think, I don't know, it always creeps up on people and it always ends up being a panic, and we'd really like that cycle to stop.
I think that some operators have really good CRMs. They have a good sales team in place, either central or in properties. They can segment their markets and their potential customers. They can then target the parents and whatever. I saw something this morning from Hugo, I think it was, talking about empty nest syndrome and how to deal with that. And I think there does have to be more of a focus on getting those systems and processes and that structure right in the first place to see you through the season, so that it doesn't necessarily get to panic stations. But this year again, I think, has been more exceptional in that, with the best will in the world and phenomenal structures and staffing, a lot of operators have been caught short by the drop in demand from internationals or domestics for particular universities, and also an unwillingness from certain universities to then drop grade boundaries during clearing to make up for those numbers that they've lost, partly because they may be a financially strong university, but partly because they don't want to drop down the rankings by taking on lower grades. I think that, yeah, with the best will in the world, it would have been still an incredibly difficult season to see out, and I think that I can't see next year being that much easier, if I'm being completely honest. It may well be, though, that given that Australia has put in these student visa curbs and they're capping those numbers really quite hard, which of course is concerning to anyone in PBSA in Australia, and Scape being probably the most exposed to that. I can see that there will be hopefully some uplift from students wanting to go to Australia who now can't go to Australia because they can't get the permission. So it may be that we see a bit more of a January market, but last year we know that January market was just decimated. So I wouldn't hold out too much for that. But hopefully there's some kind of uplift from Australia in the next academic year, and that will improve our international numbers. If Trump gets in, that will also improve our international numbers, because the Trump effect last time he was in was very real, with a drop-off of international students. For the sector, it would be great. If Harris gets in, then I would expect the US to remain popular. But again, it comes down to affordability. Not many people can afford to go to the US and be a student. Unfortunately, I think that we are very much in danger of cutting off our own noses to spite our faces by putting our prices too high. There's been double-digit rent increases in most cities over the last 2 to 3 years, year on year. That is not sustainable. It never was. And ultimately, it's led to a lot of students choosing other locations because they cannot afford to go to a certain city. And I think that's where we're definitely in danger of pricing students out of certain cities in particular. And, I would say that any city where the average accommodation is more than £250 per week for an ensuite, I would say that is not affordable. There are a lot of studies that show that it's actually a lot less than that, but they're the ones that I think should be on effectively a watch list. And if there is a pipeline that is, pretty significant, you're talking 2.5 to 5,000 beds in the pipeline to deliver over the next 2 years or so, I would say that city should also be a bit of a concern. So it's not surprising that a lot of the cities that we're hearing about, that people are surprised with the performance of their properties, are the likes of Leeds, Glasgow in some places. Yes, believe it or not. And look at the pipeline in Glasgow. That is strong. So you have to be very, very careful with your underwriting. Edinburgh, Southampton, Bristol, Nottingham, of course, Sheffield, Coventry. But there are also now parts of London where that pricing seems to have been pushed so high that you've hit the affordability tipping point. And I think we just need to be very careful that in the pricing that we're setting for the next academic year, there is something of a reset. I'm not saying rebase your entire business plan, or you'll go back over your underwriting or throw it out the window, whatever. But we cannot be looking at double-digit rent increases year on year. And I do think that's something that we need to be really mindful of. I'm not going to say what I think that uplift should be year on year, because, to be honest, that takes a lot of work and a lot of data for me to have got there. And that's what I advise the clients on. But I do think we should be more cautious, more defensive, and start to recalibrate the pricing in certain locations where existing stock is strong, pipeline is strong, both of PBSA and BTR. But that's another story altogether.
But Dan, I guess my question is, I totally agree with everything that you've just said, and I think we've absolutely hit the threshold and we're doing ourselves a disservice. But is the market and our investors ready to hear that and ready to do that recalibration and prepared for what that is going to cost?
If they are a client of mine, yes, they have already heard, they've typically already heard it. If they are buying a property or they are looking to develop, it's very unlikely they will have heard that the university numbers have either dropped or they're stagnant, or that there's challenges with university funding, or that the BTR pipeline is strong and 20 to 30% of students are actually living in BTR, or whatever it is. There is definitely a focus on selling and developing at all costs at the moment, and that's the nature of the beast when it comes to sales agencies trying to make sure that the numbers stack up for investors and developers. That's ultimately how they get paid. And that's not me saying that all sales agents are unscrupulous and just trying to get things off the ground to get paid, but there's definitely an element of needs must for certain places, which is why I think that BTR has been so ignored in PBSA feasibility studies, to the detriment of certain locations. But yes, I think investors in some locations, not all, will need to hear this. And if they haven't already, I'm obviously more than happy to talk to them. But the difficulty that we also have is that the precedent that's being set by Unite and by Empiric, for example, as I've already mentioned, they're very strong operators. They've got very good systems, structure, good footprint, large portfolios. Unite's got sort of 70 to 80,000 odd beds, depending on whether they've got rid of some of their older stock. I think that when we use those two as a precedent to then set that for our investment committees or any kind of new acquisition, development, whatever it might be, that's the wrong precedent. You've got to look at it very much on a local level, because not everyone can enjoy the success that those two have. Primarily because Unite, for example, I think it's 56% of their beds are nominated, and that's a huge number of beds where there's no financial liability there. But they're listed entities. Therefore, they can make long-term strategic decisions, whereas a lot of these other operators and the capital can be 2 to 3 years, and even less. Some of these developers just want to forward fund as soon as they possibly can and cash out and go. And that just is more and more tricky these days with the market as it is. So yeah, I would say that investors are starting to hear it. Certainly my clients are starting to hear it, but it's not all doom and gloom. The fundamentals are still there. They're still strong. There is an undersupply in some cities, and I wouldn't say it's the majority of cities anymore. There is an undersupply of quality PBSA accommodation in some cities, but we need to be very careful how we qualify the student to bed ratio, what that should look like, and how many students actually cannot access quality accommodation. Because for too long, we've not factored in the HMO market or BTR into those feasibility studies. That now all needs to be calibrated, and we have to be starting to say, look, do we really need 620,000 beds? Is that the shortfall? Does anyone see any homeless students? I can't see any tents in cities where students aren't able to live. What we're doing is pricing out students from certain markets. That's the main thing.
And again, I guess my next question is, it comes down to product and product type. And so often we've heard the market say time and time again, we can only build studios because only studios are viable. I'd love it if that story is going to change, because I've never been entirely convinced by it. But are we going to start hearing that actually other products are viable, because a studio is probably no longer viable now?
It's just so difficult to build. Those build costs are so high.
The viability for an investor on a spreadsheet looks amazing when you've got 80% studios in your building, or even 25% studios in your building. And there is always a price for a studio, as we've seen in Coventry. People are more than happy to lap up a studio for £100 a week. So there's always a price point that people will live in a studio, but that return isn't necessarily going to be there, and it's definitely not going to be there if it's not let. And if those numbers that you're talking about, Dan, and be very, very interested to recalibrate those numbers and actually look at what the real supply and demand numbers are, because that's a whole different story. And if it doesn't stack up, just don't build it. Because the trouble, and we said this before, is that the typical student accommodation product is very hard to convert to something else. BTR, you can have sharers living in a 3-bed flat, but you can also have a family. If you've already built 6, 8, 10 bedroom cluster flats, they serve no purpose for any other type of demographic. So, you know, if you're building too many beds and you're building very specific student accommodation, it's very difficult to pivot to something that means something to another type of renter. That was a bumper episode. Thank you so much for listening, and thank you once again to our sponsor, Miru. Getting video content that goes beyond the ordinary and captures people and brand is quite an art, so we do urge you to consider your video strategy and get in contact with Miru Visuals. If you would like to sponsor Hats, we do have slots available for some of the remaining episodes leading up to Christmas, so get in touch. We'll be back next week for some more news and insight, and please subscribe and share. Thank you.